The American dream was that, you get more money, you get that job, you get that salary, and you get the house with the white picket fence, 2-car garage, a dog, a couple of kids, right? But the principle was that generally the American dream was for the American middle income class, which was typically working class, people who work for money. And so, but sometimes, like if you think about it during the pandemic, the Great Recession of 2008, and any of the recessionary environments over the past 100 years, right? People lost their jobs, and the middle class dream turned into the middle class nightmare, because with the loss of the job, you still had your liabilities. But because those of us working class, we were never really taught to build up our asset columns, there was no assets. The financial habits of the rich pretty much is you take a portion of your earned income, take a portion of your income, and you build up your asset column, right? So this particular podcast is discussing, right, how do we go about building this asset column, looking particularly at stocks in the stock market. Okay. So again, it's a trading discipline that is employed to evaluate investments and identify trading opportunities. One thing they say about technical analysis is that it doesn't really tell you what to buy, but it can tell you when to buy, or it can tell you when to sell. That's the big advantage of technical analysis. Is used to employ and evaluate very, very different financial instruments and identify trading opportunities, looking at price trends, price patterns that can be seen on charts. And you see I have my whiteboard back here. I'll talk a little bit about those price trends and those price charts. One thing about technical analysis is that the idea is that the past it may not repeat itself, but like some people say, it typically rhymes, right? So past trading activity, past movements in markets, they can give us some kind of perception with regard to what, maybe even forecast what's going on into the future. Also, my last technical analysis course in March, we talked about the efficient price hypothesis, meaning that some people would say that past data doesn't describe what could happen in the future, and is not really a good tool for forecasting the future. But that being said, you look at any of the talking heads on the key CNBC, CNN, what have you, any of the Bloomberg TV, right? They do look at technical analysis, and they use that to a certain extent to forecast. Now remember, it's not a crystal ball. It's just one of the tools in this vast repertoire, right? One of this vast repertoire of tools to study the financial markets. So in sum, right, technical analysis is a method of analyzing and predicting stock movements based on past market data, primarily looking at price and volume data. As we move forward, I will focus on pioneers. Today's pioneer, technical analysis wouldn't be technical analysis with this man named Charles Dow, right? And Charles Dow, he was the first one to introduce the Dow Jones Industrial Index, right? And he was the founder of the Wall Street Journal, right? So Charles Dow, this is Charles Dow. He was born in 1851, died in 1902. And he founded the Wall Street Journal, and that became the benchmark of all financial papers are measured. Now, I personally, we use the Investor Business Daily, But the Wall Street Journal is also a very powerful newspaper, and it's the grandfather, it's the original one. He also created the Dow Jones Industrial Index, and with his discussion of the Dow Jones Industrial Index, he opened up the door to technical analysis. And what he did is he recorded the highs and lows of his average, right, the Dow Jones Industrial Index, right, on a daily basis, on a weekly basis, and a monthly basis, and he saw that there were patterns, right, that went with the ebb and the flow of the market, and he would write his articles recognizing those patterns. And so Dow theory, a theory of financial markets, and the theory actively consists of 6 core tenets.